So what's up, guys? So on top of doing gym videos, base videos, four-wheeling stuff, I also have been learning technical analysis for the last year and a half. I took a class. I'm into cryptocurrency as well, but mainly I've been doing a lot of stocks. As you can see here, I got a bunch of different ones on here with all different crazy charting going on. So I'm going to try to teach you guys a little bit, but I'm not that good at TradingView. I'll be completely honest, but this is what I'm using is TradingView. So as you see here, this is just a clean chart. It's not going to look like this for you guys. I changed the colors and stuff like that. I changed the candles and all that. But if you were to open up any type of chart, you're going to see this. Most people would look at this and say, cool, the price moves. Like, what the fuck does any of this mean? Excuse my French. But the first thing I would say you would want to do is go to the top next to the timer, and it's the three dots, and you would go in and go to where it says candles. Now that's what it's going to look like for you guys minus the black background. You're going to want to click up top where it says candles, and you want to click on that and change it to Heikin Ashi. I know it's hard to see. I think it's the third or fourth one down. So it's going to make it look a lot more clean. You can see different patterns and stuff in it. So as you see right here, you can see it clear as day, a nice W pattern, which is going to insinuate price moving up. But if you were to look at where the candles is, with all these spaces and all these crazy wicks and stuff, it's way harder to notice any W's. So for me, I go to the candles and I would change it to Heikin Ashi. So also in the video, as I go over stuff, you're going to notice that I'm drawing lines randomly and freaking can't figure out how to delete them. I've been having some trouble with that, and if anyone in here is used to TradingView at all, feel free to let me know how the hell you would refresh your chart. I know I can save them and all that, but I can't figure out how to start a new chart so that I can actually get rid of these lines without having to single-handedly go through to try to delete each one, because sometimes it's a pain in the nuts. So it's going to get a little wild through this video as I'm drawing different lines and stuff like that, and I'm going to try to keep up the best I can. Hopefully you guys can as well. We're going to go through a few things. So anyway, we're going to go up to the top where we did candles, but instead you're going to go down to indicators. I have a few ones that I really like to use, but the first one you would want to search in the search bar for exponential moving averages. So this is just how I would start to set up my charts. I'm going to try to go over this stuff. It's a lot of information in one video, but I'm going to go over it the best I can. After this, I'm going to get into, actually charting these things. So you see there, it says entry EMA, fast EMA, medium EMA, slow EMA. I like to change my colors. Entry EMA is actually the 20 EMA. It's one of the most important EMAs, which is exponential moving averages. It's how the price moves. As the price moves, these moving averages follow the price. The fast or entry EMA rather, the 20 EMA will move the fastest out of all of the moving averages. So I changed all my colors right here, and I know I talked through a lot of it, but the red is going to be the 50 EMA. So depending on if you're on the 4-hour, the daily time frame, or anything like that, it's going to change what moving average it's for. So right now, technically, the yellow is the 24-hour moving average. So, it's more important on the daily and the weekly. But needless to say, so yellow, 20 EMA, red, 50 EMA, green, 100 EMA, blue, 200 EMA. So every 200 hours, basically. So what's going to happen with these is they're going to move all around on the chart as the price is moving. When they start to cross over each other, depending which direction they cross, it's considered a death cross. Death cross on a 4-hour isn't going to be as bad as a death cross on a daily or a weekly, and price is going to move more on those 4 hours, 1 hour time frames. But as you notice here, as the price crossed between the red and the blue and the green, the yellow 20 EMA, as it crossed up, the price moved up. As it crosses this red and crosses downwards, it brought the price down. So, it's pretty simple, but unfortunately, with this, you can't just use these EMAs and just call it good, because you can have fake outs. As you see right there, the price came up. If you would have bought right there, it would have actually dropped significantly down. But then the second attempt, when we went to go up, it actually did cross, and it became a real golden cross there, which shot us up. And then as we crossed the green, which is the 100, and the blue, which is the 200, we went into a bull market. And then when we got to the top, we wouldn't have known until you started to see that yellow 20 moving downwards and cross below the red. If you bought up at the peak thinking you were getting in good, and then you saw that death cross, then, you might have to say, I got to cut my losses here. This is going into possibly a bear market or something like that. So the 4 hour is good, but you also would want to look at the daily, the weekly, all that, because just because it does a death cross in the 4 hour doesn't potentially mean it's going down from here for the next 7 months. It can go down and cross down for a day and then cross back up. So the weekly and the daily and stuff are really important as well. These are just going to show the shorter time frame stuff. So if you were looking for an entry point or something like that. But we'll get into a little more of that. But as you see here, they'll also act as supports. So if you wanted to buy off different levels, the green level there, you could potentially put a buy on that green or the blue line or the red line or anything like that. Obviously, there's way more signals that you can use. But as you see here, as we became getting stronger in the price action, we followed the 20 EMA. So we got many, many touch points on it. It tested it many, many times. Sometimes when you test the support line that many times, it's bound to break. And as you see, we started to go under the 20 EMA there. As we go under the 20 EMA, which is the yellow, we started getting rejected and following underneath the line, and we had that death cross there. As it went and followed below the green, it shot us down. I know this is a lot of information, and I hope it doesn't not make sense to you, but like I said, as I start to get into charting with these different things, if this is something you guys are interested in, I can get into a couple different stocks and show you guys like different scenarios I feel are playing out. But there's another example of a death cross going down, and then there's ways to find the bottom or expected bottoms and stuff like that, more from just drawing trend lines, stuff like this. But as you see where we're at right now, we did have the golden cross there. We started to go up, we came back down, tested the red line, fell pretty good amount below it, which is another reason you can't just use those. You could potentially buy there and still be okay, but for me, I like to try to not so much catch the bottom, but see where potential bottoms could be. And right now we're above both the 20, the 50, and the 100 EMAs on the 4 hours. There's different candlestick patterns as well and all that. But there's a lot of information in technical analysis, and I did not learn this all in one day. This is a lot of stuff going on in one video, and it could be way too much, way too confusing. So anyway, when you click on the screen, on the background, you can go, bar will pop up on the left, and I believe, there you go. Sorry, the bar will pop up on the right, and you go to appearance, and then that would be how you would change your background color and everything like that, instead of having the white with all the grids and everything. It took me a little bit to get used to this black, but I did end up liking it. So anyway, the next thing we're going to get into is the MACD, M-A-C-D. I completely am drawing a blank on what it stands for, but it's also going to move along with the price action. It's actually a pretty good signal, not at all times, but it's a pretty good signal for a buy and sell signal, and people will buy and sell off of these crosses. It's going to cross quite a few times, especially on these smaller time frames, 4 hours, 1 hour and stuff. I'm just using the 4 hour because you're going to see more examples. So as you see, we had a cross there, and the price went up. There's a couple times where it crossed under, crossed up, crossed under. Obviously, if you were swing trading, or not even swing trading, scalp trading maybe even, because that's even smaller trading, you could sell as soon as it crosses, buy as soon as it crosses up, sell when it crosses down, so on and so forth. But as you see here, we not only do we have the golden cross, we had the MACD cross up, and it caused the price action to go up. And then when the MACD crossed down, we had the price action go down. So this is another thing you're going to want to keep on your chart. There's a couple different things, of course, more than just the moving averages. That's going to give you even better understanding of where the price could potentially be going based off of these things. You can have fake outs and everything like that, just as you can on the moving averages. And that's why there's way more you have to look at than just these two things. So as you see there, we had the MACD crossed negative, and we had the death crosses, and they all kind of confluence together, causing this dip down, which it looks like it caught support on that blue line. And then we ended up going up. You can see W's and stuff and head and shoulders and inverse head and shoulder patterns, which if you're not familiar with those, I'm sure I'll get into them, or you can Google them and stuff and kind of like take a look at what those mean, because those are some of the key things to know. As you see there, it crossed, causing a couple green candles, which was people buying when it crossed. Now it almost looks like it's going to roll over a little bit. This is just off the 4 hour for today, which the markets are going to be closed soon anyway. I hope you guys are following. I know this is a lot of stuff, but it's going to take more than just listening to me. It's going to take a lot of practice on your own, but you can, when I started, I was listening to 15 different YouTube videos on stuff, and just for like a year straight, just listened until stuff started slowly making sense. And I never knew what anyone was talking about when I would watch these videos. But, after years of listening and then started to research and Google stuff, if I heard the word MACD, what the hell is that? I'd research it, and then still didn't understand it too much, but I got a basic understanding. Once I actually opened up TradingView and I started to, actually put these things into action, I wasn't potentially using money to make any trades, but I was watching the markets. I was saying, okay, the price is here. We have a MACD crossing up, looks like on the daily. On Monday, we have, these moving averages pointing upwards. We're getting support on the yellow EMA and so on and so forth. I think that I would, if I was going to put money in, I would buy it now. So anyway, there's another thing we're going to get into. I'm sorry, I was talking too much. Here's the RSI. This is the relative strength index. It's going to show the strength of the market. This is a huge one. It's very, very complicated. There's so many different things that's involved with it, but it's another thing you want to add to your chart. Whether you get it or not, that's up to you. We'll go through it enough throughout these videos, if you guys want me to make more, that we could potentially use this to our advantage. I've been learning a lot about it lately. So you want to look for different patterns in the RSI as well as in the candles. W's, head and shoulders, inverse head and shoulders, all the stuff like that. So not only can you see that, but you can also see when it goes below certain lines between the RSI, see those dotted lines, top and bottom of the RSI. When you go in between those, usually the price will follow between those. When you go below it, it's a really weak market, but most of the time you don't see the RSI go much below it, and when you do, it's an excellent buying point. That would be pretty much, in my opinion, a signal of a bottom of a market. So there's other things you can look for, which is really tough, but bullish divergence, as you see where I'm scribbling here, the price action on the top candlesticks, it's showing a W, but the lowest point of the right side of the W is lower than on the RSI down below, which shows the price action higher. So if it's showing an opposite W between the RSI and the price action on the bottom, because those we're closest to the bottom of the RSI here, then that would be a bullish sign, which could shoot the price up short term. And that's something that's going to take some time, because it took me some time. So I don't know if any of that made any sense. But so that's the top and the bottom of the lines I'm talking about here anyway. So in between here. So anything below is like oversold, and anything above potentially overbought. It's not really a thing. It's more so this trend is really, really strong. It can potentially signal an overbought territory, which would mean that, so many people are buying it, it needs to correct. But as you see below, we went down pretty low. Now, it can stay down there for sure, but anything underneath those dotted lines, if the trend looks like it's turning around, or if you're trying to get some long-term holds and you feel like this stock's going to be going up, but we're way down here in the RSI, you could start loading your bags down there, because it's a good, being down there, even though it's a weak trend, it's a good point to make some money if you're planning to wait a year or so. So as you see there, I'm drawing out some lines here. These are called bearish divergence, which is the opposite when you're on a top. If you have opposite points where the RSI came up, see how the price is way up there on the left. Not there, sorry. We have, where is it? Oh yeah, right here. So, sorry. Right here, there it is. So that's matching this point here. It's way up top. And down there is the point on the RSI on the right. And it's showing it's higher than the left. So as it's showing higher there, it's opposite directions. So that being said, that is bearish divergence. It's confusing and it's hard to show and explain right now. But as you see, price action dropped because of it. So these are things to look out for. Another thing to add to your arsenal to find out what's going on. You can also see things drop due to, head and shoulder patterns or M patterns, which that was another bearish divergence as well, and then turn into a head and shoulders. Let's see, they can find the smaller head and shoulder patterns as we spiked up in price there off of almost what looks like a V. Then we ended up creating a head and shoulders, dropped down, created a W, stuff like that. But you can draw trend lines in between defined support lines and stuff like that in the RSI. I mean, there's so much you can do, and it's a lot in this stuff. But I've been finding that it's extremely important. But you'll see as I chart some of these stocks, if you guys want to see this stuff. So anyway, lastly, we can get into volume, but I'm not going to. TD sequential. I did TD sequential free. Now, you do have to upgrade this in order to get these more than a certain amount of indicators. But this last indicator, like I said, it's not always 100% certain, but in most cases, it's very good for finding tops and bottoms or buy points of a stock. So what the TD sequential is, from my understanding, is every time of 4 candles close below the last price, you would get a green, and if it becomes a 9 flash, so there's, every candle would be 1, 2, 3, 4, 5, 6, 7, 8, and then potentially you'll get a 9, and then other times it will just go end at 8 and start back at 1. So when you do get the 9, you could either get like a normal, nothing, or you could get a green flash or a red flash. If you notice, every time you see a green flash, the price moves up shortly after. And then anytime you see a red flash, the price goes down after. So these are kind of cool to have in your chart and maybe make plays off them also, depending on everything. A red usually means a correction. This is on a 4-hour, so it doesn't mean you're going down to the bottom. It just means it needs a little correction after you see like those 6 green candles. And then, in different uptrends, you get. So if we go to like a weekly candle, you can see a giant green right there, which also in the RSI has a big V there, almost like an inverse head and shoulders. That would be the head, upside down head, and then the shoulder, and it shoots up. Now, as we're going up in price, it does get a little scary here, because if you didn't know and you were looking at the weekly and you saw a red flash, you might have wanted to sell there. That's where it can get a little confusing. As you see, it turns into a light pink. That means we're even, like when you start ignoring TD9 red flashes or green flashes, the price ends up hurting a lot more from it. It doesn't have to mean that you're going down to nothing if you see a red flash, though. It could just mean, especially if you're on a weekly, you see that pink flash, you're going to get maybe one red week of correction. That one ended up being a couple more, probably in the result of ignoring so many. But we got a couple red weekly candles during this bull market. It's just a good sign to look out for that we might be getting a correction. Nothing can go up forever, and it's good to get corrections to reset the RSI and reset the MACD and all the oscillators and stuff, which is basically like a MACD is an oscillator. The EMAs and the RSI. I don't know about the EMAs, but the RSI and the MACD are oscillators. So, anyway, this is a lot of information, like I said. Hopefully it's not too confusing. Hopefully it's not too boring. I do want to get into doing some charting on some of this stuff. I think it would be awesome. So, if you guys enjoy that, let me know in the comments if you want to see me chart this. I might put a video up after this, and we'll get into a little bit of maybe a play to do on here or something like that. And I can look at any other stocks you guys want to see. So that'll be it. Sorry for the long-ass video. Hopefully it's not too boring. Peace out.